In this video, I'm going to be showing you the most important thing you need to understand when it comes to trading. If you do not understand this foundation, this fundamental understanding, these basic concepts, you will never make it as a trader. You will never become profitable. And if you just understand this concept alone, you could essentially be a profitable trader. Now, I've made a new YouTube channel. I have a big YouTube channel, Miles G Investments, but I've made this channel specifically to share alpha, to share trading concepts, education for free so that people can benefit, become better traders, become profitable traders, and grow and make more money. I'm going to keep it simple as that. I've had trading experience since I was very young, as my entire family, father, uncle, a whole bunch of people are traders and investors. I've been around it. I've had trading experience since then, on and off, but I've been very consistent for the last 4 or 5 years or so. So in this video, I'm going to be teaching and showing you guys a couple of things, which primarily are about support and resistance. And we're going to get into some more advanced concepts called demand and supply. And it's just honestly another word for support and resistance. And I'm going to help you to understand that by understanding support and resistance, you will be able to best comprehend when is the most optimal time to buy or sell, to long or go short. And this works whether you trade crypto, Forex, stocks. I've traded all of those things. It doesn't matter. Futures, whatever you want to call it. It all works the same exact way on every chart, every time frame for the most part, so on and so forth. The first thing we're going to be talking about is support and resistance. And the first thing of all of those things, we're going to be talking about support. Support is an area or a level where the asset, the price, the candlesticks, whatever you want to call it, I'm always going to call it the price action or the price, find support. And what will happen typically when we see a support level and the price or candlestick, stock, crypto, whatever comes down to it, we will see the price be supported at that level, meaning that it cannot go under that level. Because if it's being supported, it's being held up. It's a very basic understanding. So when the price comes to a particular level, it will usually typically hold, consolidate, and then bounce, or it will just straight up bounce immediately. We'll get some type of immediate bounce. That is what support is. And we're going to go into more ICT smart money concepts regarding support, which is called demand, and resistance, which is called supply. So we're going to be getting into those things very quickly, very simply. And just to preface everything before we continue moving on, trading is very simple. Trading is very simple. The people that make trading seem complicated are not profitable traders. They're not good traders at all, and they're not good teachers. Trading is very simple, and if you just understand a few basic rules, which on this channel, I'm going to tell you guys everything I know about trading, all of my rules, and everything to help you become a profitable trader. So we just went over support. It's where the price at some type of price point, some type of an area, the price action will bounce and be supported at that level. We also have the same and exact opposite thing, which is called resistance. The price will come to a level, consolidate, and reject. And essentially, it is getting resisted. So the sellers or the bears, whatever you want to call them, they are resisting the buyers at this level, not allowing them to pass or go forward. And instead, they consolidate, reject, and they get rejected. And they are resisted. That's what support and resistance is. Very simple. But we're going to be getting into the concepts of why these things happen. Why is support? Why is resistance? What's actually occurring at that moment for the price to do that and to do this? So whether you're trading a stock, crypto, Forex, doesn't matter. It's all the same exact thing. It all works the same exact way. For the most part, there are some nuances and other little intricacies within each asset class, and it's just not important to cover that right now or at all at this point. So we have support, the price will come down, hold at this level and bounce, and then the price will come to resistance and get rejected. What's actually occurring here? Well, what's actually occurring here is that we have sell orders, a whole bunch of sell orders right here. And we have, guess what? What's causing the price to bounce at support is we have buy orders. So there are already, no matter what chart you're looking at, whatever asset, there is an order book, which means that whatever you're looking at, there's going to be sell orders, there's buy orders, all the way at many, many, many levels. But particularly, there are specific levels that we will find there's more money at one level compared to another level. And whenever there is more money at one level, we will see a bigger reaction. For instance, let's just say I have $100 buy order here, and this asset is worth $1 trillion or $1 billion. If this price action comes to this order, it's $100, it's not going to affect it at all. It's just going to go straight through it. It won't even move or change at all. But if I have an asset that's $1 trillion and I have, let's just say, $1 trillion sell order right here, or a buy order in this instance, because we're coming to support, we are going to see an insane or massive move that will probably do something like this, right? If it's $1 trillion asset and I have $1 trillion buy order, that's not necessarily a good comparison with numbers, but I'm just helping you to understand how it works. If there's $1 trillion buy order here, boom, it will go up here immediately and essentially double based on the market cap. But that's a whole nother concept that we don't need to understand. It's not relevant. The point is that if there's a lot of money at a particular level, the price will find a reaction there. And if there's not enough money, because we can have monies and orders all at these certain levels, the price will just go through it, not make any type of move or reaction. But the institutions and the whales, the people that are actually running the market, that are actually moving the market, they have their orders set at specific levels where they can see these levels in the order book and they can understand where is going to be a good place to put their orders, whether it's a buy order or a sell order. So that's essentially what is causing the bounce. That's what's causing the drop, the rejection, is orders in the order book. That's something that we will cover in another lesson, another video. Now here's another very interesting thing that I want you guys to understand, and it's very, very important. So resistance is another word for supply, and demand is another word that you guys are going to hear in trading or technical analysis for support. And what this means is, it's just another term for it, another word for it. And in technical analysis, there's going to be a whole bunch of words that all mean the same exact thing. So what demand means is that there's a whole bunch of orders, buy orders right here. There's demand. Like people want something a lot, a whole bunch, not only institutions, but retail investors, traders. They have a lot of orders at this particular level, which means that if there's a buy order and it's a lot of money, it's going to push the price up at support. That's called demand. Supply, the way I like to think of it, is the price is coming up here. There's a whole bunch of sell orders. It's kind of like supplying the money to the institutions. That's kind of like the way I like to think about it. You might think of it another way, but that's how I look at it. So there's a whole bunch of sell orders here all together. And when the price comes into the sell orders, guess what? It's providing liquidity to the whales and institutions who have now more money that they can put more orders into other specific levels. But supply is rightfully called so because there's sell orders liquidating that asset to cash, converting it to cash. And that's what causes it to go down, because the asset is being more sold than it is bought. And the reason why things go up more so than they go down at certain times, because there's more buyers in the market and there's more sellers in the market. And that's it. Super plain and simple to understand. Now that we understand these basic concepts, I'm going to show you how you can apply these concepts when it comes to trading so that you can be a profitable trader and make more money. Now, the basic rules for trading, period, and the most basic strategy that you must understand is that you want to buy low and sell high. That's the whole goal, because if you can buy low, you're buying at a discount, selling for a premium, you make money. If you buy at a premium and you sell for a discount, you lose money, and you never, ever, ever want to do that. So what we essentially want to do is we always want to buy at support and sell at resistance. And resistance and support, they're all relative to each and every time frame. But let's actually see how we can apply this in real life to any chart or whatever we're trading. So if we go over to here on the 2 hour time frame, even the 4 hour time frame, what we are seeing is something that's very similar to what we were just looking at: supply, demand, resistance, and support. So what happens here is that the price comes up to this level and it gets rejected, comes down, bounces at this level, comes back up, gets rejected, comes back up. It's bouncing back and forth between support and resistance. And if you can understand or understood these basic concepts by we buy at support, buy at support, we buy at support, we sell at resistance, we sell at resistance, over and over, you can make so much money, and it's very simple. Now, how do we draw resistance and support levels? Well, what makes a valid trend line, and the trend line is a line that the price can be determined as resistance, or a price or the area, the range that we're looking at can be determined as support, is we want to see several touches on that specific level. So what I will like to do is I will move up, although this is the lowest area that the price has come, that this is truly the support level. We want to put the line, the trend line, resistance or support at a level where we're getting more than one touch. So here, if I move the trend line up, we can see that we're now getting 2 touches, but if we move it up just a little bit more, we can get 3 touches. So what I'll do is I'll move it up here, and that gives us a valid level of support. And a support level never has to be the exact number on the chart. It's just an area where we can see that the price, whenever it comes into this area, bounces up very quickly. And we can see that by the wicks, because whenever we see wicks, we can see that that means that there's a lot of huge orders, particularly buy orders. Whenever the price comes here, look, the price just bounces up immediately. And the same can be said with resistance. Look, whenever the price comes into this kind of area here, we can see that there's even about 4 touches. So look, to be specific, I'll show you right here. 1, 2, 3, 4. And that gives us a valid trend line of resistance, the valid area. And I'm gonna draw and bring the line down a little bit here. So look, 1, 2, 3, 4. That gives us a perfect resistance and support level. So particularly what we are looking for is at least 2 touches to create a valid trend line. But the more touches, the more important and specific that that level will be with the price action, and how the price action will interact with that level. Now, how do we trade this? Well, if we see when the price comes here, it starts to bounce up, that's probably a valid indication that the price is likely to bounce up from here. We're buying at a discount in this particular range that we're trading, and we want to be selling at resistance or somewhere near resistance. We buy low and we sell high. Very simple. And when we are buying, we are longing or we are purchasing the asset, the stock or the crypto, whatever it is. And if we are selling, we are obviously selling the asset or shorting. So the same concepts apply. In this video, I'm not going to be going over exactly triggers and how we should be trading and buying and selling here. What I've shown you guys here is just a basic understanding of resistance and support, demand and supply zones. And this is going to lay the further foundation for further lesson and further understandings of technical analysis and trading. So expect more videos. If you guys got something out of this video, make sure you give this video a thumbs up, subscribe with notifications on, check out the links in my bio to help you make money. Follow me on Twitter and all the links that I have as well. Thank you so much, and I will see you later.